Hello there, this is fairbinaryoptions.com, and we are looking at the euro and the US dollar today, partly on the fundamental reason and partly on based on technical analysis reason. You will have more details in a second. So fairbinaryoptions.com. I would still say the market here is forming a falling wedge as from this moment of time, from these highs here to the downside here, all these leg here to be only the first leg of the falling wedge or terminal impulsive move. And this falling wedge started by the time the President Draghi talked about the fact that the ECB is going to act and that they are going to cut the rate and so on and so forth, somewhere at the beginning of May. Now I would label this one as being only the first leg of the wedge, so this to be wave number one. And then of course we need a move to the upside, and the move to the upside from my point of view goes all the way to here when this triangle breaks to the downside 1 and 2. It is not a triangle for the second wave, as it cannot be, even though all the legs are corrected, but this is a double combination. It goes A, B, C, X, and then A, B, C, D, E. It ends with a nice contracting triangle here for the second one. By the time that the B2D trend line here is broken, or by the time that the B2D trend line broke lower, then the whole market started to sell the euros, and we had an impulsive move here. The first impulsive move was a wave A, then a B wave here, and then another 1, 2, 3, 4, 5 for the move to the downside. And I would say that we have all the chances in the world that this third wave to be done here. Now, as you can see, it means that the euro dollar is not out of the woods. Even though we are looking to buy call options from this moment of time, we need to have a fourth wave somewhere around here, but that would be pretty much it for this move to the upside. Plus, keep in mind that a Federal Reserve or the FOMC statement is going to come next week, and now the markets are positioning for that event, and not only that they are positioning for the event, but all the shorts here that shorted the pair here and here, they are booking the profits, trying to avoid being trapped on the wrong direction when the Fed is coming with the statement. And therefore I would still favor, let's say that this is the third wave, I would still favor call options with end of week expiration date. This being Thursday, end of week means next tomorrow on Friday. So by the time this one goes here, this should be the 2 to 4 trend line, somewhere like here, like this. What's mandatory to come is the 135 level, and the reason for that is the fact that in a terminal impulsive move like a falling wedge, you need to have overlapping between the first and the second wave. In order to have overlapping, it means that the market needs to travel above 135. Now this is 134.73, so on the 135 will be a confirmation that the wedge is formed, and we'll look for a potential squeeze into Friday in the evening, and this is the reason why buying call options. So let's write here on the screen the plan or the scenario. We like to buy call options right here, right now. We like the euro US dollar to the upside here, based on fundamentals, in the sense that PMIs in Europe were better than expectations, and of course on technicals, a corrective leg higher as the fourth wave of a falling wedge. So buying call options with end of week expiration date is our recommendation here on fairbinaryoptions.com. Thank you for being here, and let's see if the market is confirming this move. Again, it needs to be a corrective wave. Therefore, don't look for impulsive moves, don't look for aggressive moves, but also it needs to have a value more than 135. Now this is Wednesday, so probably today we'll still see price being contained into these ranges and maybe only threatening the 135, but I don't think that it has the power to move over. But moving on to Friday, we might just have a chance to see that. Thank you and bye bye.